Welcome to the Payments Trilogue, where 3 seasoned professionals discuss payments and more for Europe and beyond.
Hello, my name is Michael Salmony, and I'd like to welcome you to another episode of the Payments Trilogue, where this time we don't only talk amongst us payment geeks between the banks and the fintechs, we're actually talking to somebody who uses the payments that we are carefully constructing, and that is Atze Faas from EuroCommerce. Welcome, Atze. Maybe you could tell us a little bit about yourself and which organization you represent.
Thank you very much. Pleasure to be here. So, quick introduction of myself. I worked for BP, the big oil company, for 30-something years. And the last 10 years of that were in payments, European responsibility for the cards acceptance. So we did things like terminal replacement programs, acquire negotiations, scheme settlement negotiations. So the business side of things. And then in early 2022, I joined EuroCommerce as the payments advisor. EuroCommerce is the trade federation for retail and wholesale, representing both the big brands like IKEA, Carrefour, H&M, as well as around 5 million or so SME retailers. So quite a variety in our membership. Now, EuroCommerce has been historically always quite active in the field of payments from the merchant associations. I think we're the only one who has a dedicated resource this time in my person looking after payments. And I think, the very first activity that I found in the archives dates back to 97, where we first started complaining to the Commission around Visa and MasterCard. It just shows you, how that is an area of focus. So my work is mainly 3 blocks. It's around payment costs. It includes the cost of cash. I wasn't responsible for cash in BP. The second block is around, what's happening right now in terms of regulation, legislation. And the third block is sort of more forward-looking things like digital euro, or indeed instant payments at the point of interaction, and that kind of thing. What I also done in the early stages is form what we call a merchant payments coalition, together with other merchant associations, from the airlines, from the online retailers, from independent retailers. SME United is in there. And recently we added the European Association of Corporate Treasurers to it. So it's just an effort to bring the merchant perspective, voice stronger in the room. I felt that, the banks, the PSPs, the consumers are all pretty well organized, have a good lobby, but on the merchant side that was quite a bit weaker, and we're attempting to, let's say, strengthen that.
That's very impressive. I mean, you've put an amazing organization together, and it's good to get the merchant voice, because I also get the impression it's a lot is just talked amongst the one side of the industry. You mentioned the digital euro. I think you're one of the only people who actually like the digital euro.
Indeed. And it's sort of, carefully phrased. We say we see the potential of the digital euro, the potential to lower the average cost of payments, which only has gone up in recent years. The increased popularity of e-commerce, especially as a result of COVID, the increasing popularity of PayPal, buy now, pay later. Those are all payment methods which are more expensive, let's say, than the average. So you saw that average creeping up. And we look at the digital euro as a way to lower that average. It's not to replace everything, but just to balance it more out. I would also say we've seen scheme fees creeping up after IFR. So we are worried about this that trend, and this is why we see the digital euro there. But it's not only about cost. We also see the digital euro as a way, for more European autonomy, resilience, and especially relevant these days, but also as a way to innovate and more on a European scale. Having said that, we are calling on the ECB to, let's say, keep it simple in the first instance. I have said to them, and I'll repeat it here, we should work on getting the 80% use cases, the buy now, pay now, one-off payments done first, and worry about all the bells and whistles, the recurring payments, the conditional payments, the offline payments, a little bit later on. In terms of resilience for consumers to be able to buy their daily groceries, fuel their cars, get their medicine, use public transport, that is the key thing to have available first.
But could I jump in here and nail you down on a cost thing there for the digital euro?
Yeah.
Because you came out with this, well, let's say controversial paper.
Provocative, I hope.
Suggesting that it should be free, not just to consumers, but also to merchants. Can you explain that?
We've not said free. We've said a couple of things. So first of all, we are saying both cash and digital euro, which is the digital form of cash, are different animals than private payment means. There is this mandatory acceptance side of it. It's public money. There's no liability on the issuer, at least on the private intermediaries. So we're saying that logically the cost should be coming in quite low. We are prepared, of course, to pay our providers, let's say the acquiring side of digital euro, for their services, like we do for cash handling, like we do for Visa MasterCard transactions, and so on. What we are worried about, and we think it's illogical, to compensate the issuing side of it. That's not happening in cash. Why should it happen in digital euro? Especially because intermediaries don't have a counterparty risk there. So we are saying having a inter-PSP fee will make it overly complex. You are effectively replicating the card, interchange plus kind of system. With all those money flows that need to be managed. Again, there is a fee imposed on merchants where we have no influence on, like we have with interchange and scheme fees. And if you look at the language of the proposed regulation, it says the legal tender status means mandatory acceptance and at full face value. So if the consumers are getting full face value, why aren't the merchants getting that too?
Mm-hmm. But looking beyond the digital euro, can you tell us a little bit about the sort of account-to-account payment systems? I know Rolf is super interested in that.
Yeah.
What your view is on those?
So we're quite keen to see those flourish. We have quite high hopes. Again, hopefully helping to lower the average cost of payments. But you see this fragmented landscape, and listening to previous editions of the podcast, you hear that too. So in Europe, it's great that we have so much competition and we have so much creativity, but it leads to a fragmentation. And I think, to a certain extent, we're fighting ourselves rather than creating a European winner or winners that would bring Europe forward. So
would you have a favorite? Would
Sorry?
you have a favorite out of the ones? We talked a lot about retail payments and the various ways, and especially account to account. So EMSA, EPI, open banking, and what's your favorite beast?
Well, that's a hard one. In an ideal world, I would say let's have the open standards of SPA and EPC QR codes and so on. Let's have the backing and the centralized approach of EPI, and let's have the consumer base that the EMSA members have. If we would throw those together and add in, just as a flavor, also public payment means CBDCs, whether digital euro, digital pound, digital zloty, digital krona, I don't care. That would be my ideal world. And it was interesting that Cipollone in a call, and I think even publicly says, well, actually the digital euro consists of three pieces. One is the legislation, second is the infrastructure, and third is the product, the proposition, if you will. And we are saying, okay, this infrastructure piece, the middle piece, is a great idea. Let's build like a European road system. He even calls it a railroad, I think, where everybody can travel on, open, standardized, easy to integrate, easy for consumers to understand. and that will yield all those network effects, economies of scale, but still leaves open plenty of competitive space for, let's say, a brown vehicle, a big vehicle, a two-wheel vehicle to drive that road, and that would even, I think, bring Europe in a space where that could be used elsewhere
Well,
across
I'm
the globe.
biased on this, obviously, but
Yeah.
don't you think that we've just spent, 5-7 years and billions on building that infrastructure? It's called PSD2 APIs and all the connectivity that we have there. So this is the one thing that we have. And if anyone turns off other electronic payment methods tomorrow or loads them with a high tariff, that the only one electronic alternative that we have to reach everyone in Europe is through open banking.
Yeah.
And so it's also from a merchant's perspective, if you want to reach people electronically there, you have, and of course, it should not just be a fallback. It should or could be the basis for all of this.
Well, I think that's the key, and we're working very hard in various ways to make sure that consumers understand it and actually use it, I think there's a missing piece there on facilitating account-to-account payments at the point of interaction because of this fragmentation that I mentioned earlier. And, in this PSMEG sub-working group, Ralph, that you and I are working in, we are talking about, okay, so should we have a way for consumers to recognize, okay, I can use my account-to-account based solution here through a symbol, much like the contactless logo or something similar, that simply signifies, okay, consumers need a little bit of, I think, education here. Also in the current context of European independence and keeping your data in Europe, that there are propositions like the PSD2 PISP, but also EMSA and EPI for all eye care that are using that and are based on that. But I think the biggest issue will be like with Digital Euro, how do we get consumers to understand the benefits of it? Why should I use it? And for merchants to have an easy way to offer it.
That's for sure. Another hot topic I know you have is the surcharging ban. Can you tell us a little bit about that?
Right. So, surcharging for payments is something that we would favor, but there's always a but. So why do we do that? So first of all, we think there's this, misconception that we have let start in the consumer's minds, including myself, that payments are for free. They're not. Payments are costing something, cash payments, whatever, on the consumer side as well as on the merchant side. So the question is, who will pay for it? And I think, in the end, the consumer always pays. But the problem is, do you do that directly? Letting the consumer know, okay, this is the consequence of your choice. Once I inform you what that choice is, you can make a conscious decision. Indirectly, merchants pay for it somehow and put it in their sales prices. They have to recover those costs, of course. Or even more indirectly, have the taxpayer pay for it through, let's say, in the case of the Digital Euro, that could be an option. Now, why is it important? I mentioned this, creeping increase of the average cost of payments, and the moment you sort of blur that picture by putting in an average amount of all the different payment methods costs, weighted average, you are effectively inviting consumers who pay with a relatively cheap payment method to sponsor, to subsidize those that are using buy now, pay later. And you may have seen that example that we use, taking a washing machine of 600 euros that would be costing 5.95 if you pay, let's say, with a domestic scheme, even with cash, but would cost 620, 618 to be exact, if you would pay with buy now, pay later. So how is it fair to do that? And how is this, helping keeping consumer prices low? And the second area is more around the right to surcharge. We call it the right to surcharge. Whether we use that right is a different conversation. I know some of my members hesitate to use it. Supermarkets, they don't, the speed and the convenience, lots of traffic, they don't want to have a discussion at the till. Well, actually, now you're using Amex, you should pay a surcharge. Or now you're using Girocard, will give you a discount. So those are hard conversations to have and cause a lot of friction. And the other thing, the right to surcharge should come with some boundary conditions, like you've seen in Australia, and that's actually already in the text of PSR, Article 28.5, if you want to be exact, that says you shall not surcharge excessively, and we are all for that. It's just a way of showing consumers where the costs are, and if they make the conscious decision to do that, then fine. Another guardrail would be, no blended surcharging, because then you lose the effect of it. And the other guardrail would be, there has to be at least one digital payment method without a surcharge. We think that's quite fair. And it will help financial literacy. It helps consumers finally understand a bit more, the consequences of their choices. Whether in the end it will lead to a reduction of prices and not cause too much friction is to be seen. If you ask me honestly, it will be difficult to get rid of all surcharging bans, in particular because some member states, I think around 16 of them, have exercised their right to impose a complete surcharging ban in their member state. And I'm not, soon seeing them giving up that.
Yeah.
But, in economic theory context, the way you can influence consumer behavior and show true value cost, it would be fair to have surcharging allowed.
I'm very much on your side of the argument. I mean, if you make it transparent which payment instruments are expensive, and you allow the consumer to choose, and you get more transparency. But I hear Xavier doesn't quite agree with that.
No, well, it's not theoretically. I could agree, or conceptually, but I think it's the nuances are more detailed, I would say. So when coming to the concept of costs, the problem is those who are invisible, those who nobody knows who is paying. And I think Atze was right when pointing that at the end of the day, there are only two people paying, either the consumer or the taxpayer. No other. Even merchants in this regard, they are just intermediaries. It's the consumer or the taxpayer. And the problem with payment instruments is that in many cases, there are invisible costs which are not easy to assign to any party. And eventually it will be paid by a taxpayer or a consumer, but nobody knows what. And the problem is that if you take each payment instrument by its merit, it will be very difficult to assign the different costs. So we have to reach a basic understanding to make it viable. Because the other thing in which I agree with Atze is that, any instrument, even the digital euro, conceptually has a value as an option because there is another way. So it will bring something positive. To analyze each one, you have to dig deeper and see which are the pros, which are the cons, what are the costs. Are the costs going to be borne by the right party or not? So that's the beauty of each instrument. It's not conceptually that as an option, it will bring value onto the table because there will be an additional choice. So we have to compare that. So in that sense, I think that we have to work a payment system in which beyond the strict marginal assigning of a cost to a particular transaction, we are able to produce something which is feasible for the consumer and for the users to use. So it's of course it is not exactly per transaction exact calculation on each cost and each price and whether this is fair or not, because that would make life impossible. It's a consensus which makes things doable and life easy. So,
Yeah.
and therefore, we have to assume that yes, there will be cross subsidizations, and there will be averages being applied to certain instruments and in between instruments. Why not? It's the only way to make life easier.
True, and in supermarkets there are goods that are loss leading to get consumers in the store, and that's a way of cross subsidization too. But that's the choice of the merchants whether they do that or not. And if I talk to the, let's say, Visa, Mastercards of this world, they're saying, well, payment costs are just input costs like electricity or like wages or like real estate. And I'm saying, well, in that case, the consumer has no choice. He cannot say, well, I'd like to use that fridge, or I'll use that person in the store, or I'll rather, make a choice there. Those are even more indirect costs. And you're right, Javier, that it's always this cost-benefit trade-off. Merchants get accused quite often, and I'm hearing it all the time. We're only looking at the costs, and that's not true. We're having this cost-value trade-off, cost-benefit trade-off. If you and I go out to buy something, you weigh those two, and we're not always seeing the value for the money, and this is where we think, even it should be clear to consumers. If you want to use your Amex card or your Mastercard Gold to get all those member rewards, that's fine. But those are actually paid by other consumers who are using, let's say, Girocard or Carte Bancaire. And to your point around the taxpayer, just wanted to make the comment there. In the end, that is the consumers paying that too through their tax
Well, same
tax bill.
person, two hats.
Yeah.
Yeah.
You were touching there on a very hot topic at the moment, which is how to get the account-to-account payment methods into retail stores and into particular onto POS terminals. So.
Yeah.
How to ensure a fair selection possibility or option there for the customers. But we already start, I guess, with a bit of a clash of interest between what the merchant's favorite payment option would be, and they are trying to encourage customers to use, versus leaving the choice to the consumer on
How
which
so?
payment method they want to use. So how do you see that tension?
Well, I'm not sure which tension you mean. I think.
No, I mean, if you are trying to get people to use, say, the payment method which has least cost to you.
Well, it has most value in terms of the cost, yeah.
Yeah,
So,
versus what the consumer wants, whatever, maybe his Amex points.
No. There's a freedom of choice there, and we're not going to dictate anything. In the end, if we don't like, let's say, Amex, merchants always have the option to not accept those, which is a difference, of course, with cash and digital euro, where we have to accept. But I think, you can't blame a merchant for having a preference and selecting that on the payment devices. But I think we're all for consumers to override that. And, once instant payments at POS gets more common for consumers to use, I think we would be happy to take those. The same with digital euro when it comes that far. So I don't see that tension quite the way you see that, I think.
Okay, well, good to hear, actually. And, I'm a part of a working group at the EPSG at the moment, looking at the selection of payment options and how to combine or get the account-to-account options there alongside the existing card options and other options. And the working assumption is that it would be best if that selection process would not require any communication between the merchant and the shopper, so that you don't have to ask, how do you want to pay, or you don't have to say. So it's just sort of, it can be, the choice can be made without the friction of communication. And so the idea is basically that the merchant terminal, POS, would open up all possibilities at once. So
Hmm?
it would show a QR code. It would be open for NFC communication. You would basically have the POS terminal is open for everything, and then the customer chooses whether they tap their card or tap their phone or select the Vero app and read the QR code or
Yep.
whatever. They take their camera to do an open banking scan, and would that be your favorite solution as
Well,
well?
I think so. I mean, as I mentioned, not all merchants will have all methods available. I'm not sure if you're suggesting that they should be mandated to have everything
No.
available,
I mean,
but
obviously,
yeah,
what you present. I mean, it's you presenting. It's your terminal
yeah,
presenting options, and
yeah.
they're obviously limited by what you accept.
Exactly. So if there's this, the merchant side offering a suite of different payment methods, and there's a match with the consumer's default choice, then the transaction should go through flawlessly and also quickly. In particular, if you think about public transport and supermarket queues. But if there's not a match, then I think there is a level of interaction needed where the consumer needs to do something on his his consumer device rather, to have that match there. So I'm with you that that should be frictionless. Having said that, there may not always be a match between what the consumer has put in as a default and what the consumer is offering.
Can I put another thing to you, Adse? There was a time when I was talking to merchants, they were sometimes at least subliminally saying, oh, payments is easy. We're being ripped off by all these PayPals and Visas and MasterCards and banks and everything, and we'll do it ourselves and we'll do it much better and much cheaper. And some merchants tried to do that, but it didn't go well usually when they discovered how difficult payments actually are, how to do acceptance and fraud and everything. But where does that debate stand now? Is there still a tendency to feel you're being ripped off or not?
Well, ripped off is maybe too strong. We feel there's an imbalance in power. Payments is not the core business of a merchant. So you have some big merchants who are more, let's say, sophisticated. They, like BP had on, or still has, on having experts. They can afford that. If you look at small medium enterprises, they don't have the knowledge or the manpower to look deeply into it. And I think payments was felt by senior leaders in middle to large merchants as complicated, as costly, as nobody really understands it. And they're turning around. I think you see some big merchants setting up their own PSPs. Some of our members have that, and wanting to take matters in their own hand. And that sort of fits with this merchant coalition type of thinking. If you are not able to change the imbalance in power on your own, why not see if you can get into that mix and get that knowledge in house? And what you see is that then actually they offer that service to other merchants, both smaller and larger, who like that because they are saying it's finally a PSP who understands my business more, who talks my language, who doesn't only talk about technical integration and costs, but also talks about how it works operationally and how it works financially. Those integrations are equally important. You can have a very smoothless technical integration, but if it screws up your accounting system and reconciliation, you're worse off. So I think those are important things, and I think in the next, maybe 1 year, 2 year, 3 year, you see more merchant, let's call it assertiveness, wanting to take the lead, wanting to maybe even collectively buy or negotiate to sort of restore this power imbalance. And this is also our storyline a little bit towards DG Comp and other national competent authorities, that somehow we're being confronted with a lot of stuff, be it mandates or be it costs, without us truly understanding the why and the what in terms of value, what it brings to us or brings to consumers.
Very clear. I think we're gradually getting towards the end, but have you,
Yeah.
Ralph, any other things you want to use this opportunity to
I do, but I
challenge
want
us
to let
on?
Javier go first. So.
Okay, well, I just a comment. Listening to Atze, which has been very interesting. I think that there are some fundamental symmetries in relation to merchants. Merchants, I would say, they see payments in two ways. The ones which are regular and they pay for the standard level of sales. That they look into the cost very with a lot of detail and very carefully. But when you talk about additional sales, then the price of the payment instrument allowing that additional sale can be anything, because it brings a lot of margin. And that's the reason why 50 years ago credit cards became popular, because they brought additional sales. So merchants were very happy to pay high fees for those payment instruments. When they become the normal, then they are not seen as a premium instrument allowing additional sales. So they look them asking for the cost and being very scrupulous on what they are able to pay. But at the end, if a payment instrument is able to bring new sales, that will be very much welcome. And so, but there is this kind of dynamic in between a new payment instrument bringing new sales and becoming the next normal. And also the way merchants approach payments, well, it's they have to understand also that they are in a competitive market. So if we think that we are in a competitive market, the prices will go wherever they have to go, provided it is a competitive market. So if they rise, well, sometimes fuel price goes up and then down, and so. But then what we have to ensure is that there is a competitive market. That prices go up and down. That's something natural in a market. But we have to look after true competition.
Now, I agree with that, and we've seen a level of commoditization of payments, and therefore, it would be logical that prices go down, especially if volume and value increases. But we are not seeing that. And one of my other beefs is, percentage-based fees. Why are they still, the most common, especially in the international card schemes and buy now, pay later? Because, once SCA is applied, we sort of, out of that equation, it's properly authorized, it's properly authenticated. Why should there be a difference between an e-commerce transaction and a in-store, or between interregional and domestic, or between credit and debit, or between commercial and consumer? It doesn't make sense to us. So I think this is the sort of thing we have to go through. And the additional sales, you're right, and if merchants make a conscious choice to offer buy now, pay later because they think it will bring additional business, of course they should. And if they are prepared to pay the price because of the let's say sales it brings in, also fine. But I just want to remind you, of our memberships, the average margin or so on food is something between 1% and 2%. On non-food is somewhere, 3 to 4%. If you compare that with the margins that, let's say, Visa and MasterCards of this world make, 50, 60%, it sort of shows you the lack of competition on that side and the fierce competition on the merchant side.
But there are different species of PSPs. I guess that those who are providing services to merchants, they also behave as merchants when providing their services, and they are using their freedom to ask for what they think it's fair. Why are they wouldn't be merchants in their provision of services to other merchants?
So this is one of our worries. In many cases, when we talk to acquirers, especially if you're on an interchange plus basis, they will say to the merchant, well, the only thing we can negotiate, dear merchant, is on our acquirer margin, acquirer fee. Everything else is a given. So they sort of lean backwards and they say, interchange is a given. Scheme fees, we don't understand them because there's 800 or to 1,000 different one of them. And when we say to them, are you sure you're not making any mistakes? They're saying, no, we are regulated entities. We're not making mistakes in scheme fees. But at the same time, they don't understand them, neither do we, and they make errors. In BP, we had one of those cases, and the acquirer was adamant, the billing was flawless, and we found hundreds of thousands of billing errors in our, not in our advantage. So I think it's being made overly complicated. It's being made, unnecessarily intransparent. And that leads to those cases. Now, if you have then merchants who choose consciously for blended fees, you may have a point there that there's more alignment of interest. But I'm telling, especially to my SME members, when in a blended fee, the acquirer, the PSP, has to build in some margin to deal with fluctuations over the week, over the month. He's not going to make a loss-making business on that. So you're paying a little bit of a premium, if you will, in the blended fees, but it gives you the ease of reconciliation, the ease of billing. If you don't have a department that wants to split it all out, it's up to you, as long as you are aware of that choice. And I was talking about consumer literacy. There's also merchant literacy. I think many merchants still need to better understand how payments work, especially digital payments, in order to make that value cost trade-off.
I have two more questions, and I have to hurry up, I guess, to fit them in. But the first one is, because we spoke a lot here about how to win the hearts and minds of consumers for a payment method. So now my question to you is how to win the hearts and minds of the merchants for a payment method. I was always my thoughts were that the top three drivers or criteria was: number one, reach; number two, conversion; and number three, only the price.
Yep.
So do you share that view? Have a different one?
No, I think we're on the same page there, but I call it differently. So first and foremost for merchants is the consumer experience, the customer experience. We are in the business of selling goods and services. So everybody loves to buy but hates to pay. So you have to make that payment piece as easy as possible for consumer. That brings you to that conversion point, and making sure that you serve the consumers in the best way. But again, you want to do that at a fair value, a fair cost, so it remains affordable. So we very much, are, if you will, representatives of the consumer side in making sure this value for money trade-off is there. Now, having said that, you see merchants taking a step forward and saying, well, why don't I try to get as much of that customer journey in my own hands? You have these merchant apps that combine payment with loyalty, with identity, with accounts, and with all other nice bits and bobs. And this is like you see with other offerings, trying to increase consumer stickiness is then a word that retailers use a lot.
Okay, well, thank you. And my other point is about the how to bring different initiatives possibly together. We touched on it initially, so interoperability of all these various account-to-account payment systems coming up. And I wanted to test the EMSA suggestion on you on that, because they are basically saying that the regulation should impose interoperability similar to the GSM roaming at the time. So we had all these different, systems, different countries, not systems, they're all GSM, but we have different things and quite different commercial models, and it was expensive to roam. And then it was basically imposed that roaming should be sort of transparent, and everywhere you can go everywhere, make calls as if you were at home. And so that's the model they're proposing there. So basically an interoperability framework, they call it EU Pay. And then regulation would impose that whoever wants that label, EU Pay, whoever wants to be part of that has to be interoperable with all the other ones.
Yeah.
And then based on that, every EU merchant would have to accept one of those, but only one, because if you accept one, then it would be interoperable with the other ones. So, would
yes and no.
Would that fly with you?
No, it doesn't. I understand it from the consumer point of view. If then I am a BLIK consumer and I want to go to Spain, I transact on a Bizum enabled terminal as it were a BLIK transaction. But if you're a big merchant like, let's say, H&M or IKEA, you would still have to have a Bizum integration in Spain and a BLIK integration in Poland, and they may not necessarily be the same. So this is why I'm calling, let's jump over our own shadows and, come with this European infrastructure that would enable both BLIK and Bizum, and that would very easily enable Bizum consumers to use their favorite payment method in the Netherlands or Poland or wherever, and would still have this ease of integration. So what I do like about EMSA is, making it easy for the consumer. I still do not see, and Christian tried to convince me a number of times, how it's going to make my life as a merchant, a multi-country merchant, easier. And I just wanted to make one other comment, and I've said this aloud in many fora already. Somehow we're talking about, a capital markets union, we're talking about a savings and investment union, but we're not talking about a payment services union. I think we should jump ahead, also in the leapfrogging context, Michael. Let's create a single market for payments. Then we can leave a lot of this sort of member states kingdom thinking behind us. If we want to win in the global space, we need to take some drastic steps and be able to give up some of our local hobbies.
Thank you. I'd love that, of course.
Sorry. That was the intention of SEPA. SEPA is the Single Euro Payments Area, and I think that's the last target. But I think that we have gone through phase 1.0, and we need a SEPA 2.0.
Agree. Fully agree.
Okay, I think I must gradually call it to an end. It's been a completely fascinating discussion. Atze, you've been lucid and very clear and incredibly knowledgeable. Thank you for sharing all your views. And when finally the TPT podcast launches its own merchandising range of T-shirts and cosmetics, we will reach out to you how to sell it to the market.
Absolutely.
Thank you very much, Javier, Ralph, everybody for watching, and Atze for joining us.
Thank you very much.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.